All right. Good day, everyone. Happy Democracy Day. Happy Democracy Day to you all. Yeah. So, today we are going to do an analysis on Zichis, Zichis agro, uh, aligned, allied industry. So this is a new company. It just got listed 2026. That is this year, beginning of this year. As you can see, there is no market at the back here. It's just from here, started from here and is going and it went up here and came down here. So what we're going to do is what I call textbook Elliott wave analysis. So I want to actually apply everything I've learned about Elliott wave on this live chat. Okay. So and I want you guys to also join me too. Okay. I've learned so many rules on Elliott waves. So we are going to be following this Zichis stock market judiciously to learn when the wave extended, continue studying the market and seeing how Elliott wave actually works in real time. Okay, so as you can see, I've not yet brought up the candlesticks. I'll bring it up very soon. So Elliott wave, as I've described, is it comprises of five impulsive waves and three corrective waves. Okay, so the impulsive wave is usually the first wave is bullish, second wave is bearish, the third wave is always the longest, and also sometimes you see gaps, and is also always more than 100% of the Fibonacci. Ideally, is meant to be 1.618 of the Fibonacci extension. So we are going to actually do all those analysis and come to a conclusion. Yeah. Okay. So let's start with the basics. Five waves. Let me bring up the candlestick pattern. Okay. As you can see, these are our daily charts. Since the market just started, in daily chart is going to be ideal. It's going to be an ideal place to start. You can see the market just started from here. So this is wave one. This is two, three, and this is four. Let me remove this so I can continue. All right. So we are going to bring up our first of all, we'll start with the Fibonacci retracement. Even though we know that this is wave two, where my cursor is, normally we're supposed to use retracement to know how uh supposed to use the retracement to know how far the market went on this bearish run. Okay, and retracement always happens between 0.328, 0.618, and 0.5. It's always rare to see retracement that happens within 0.786. Okay, so that is that. So as you can see, you know, looking at the market here, you can see the market went up and then retraced to 0.328 for wave 2. That is where wave 2 stopped. And why this market is actually very strong is because of the fundamentals behind it. It has very strong fundamentals, and their financial report is very exponential. Okay, so this is our wave 1 here, then wave 2, then wave 3. Wave 3 is should always ideally be more than 1.618. Ideally, it's supposed to be one that more than 1.618. So This is where wave two stopped. Sorry, wave one stopped from here. And put it here. Wave to stop. Let's extend this extend line. Okay. As you can see, the wave three actually crossed 100 and gave a gap. You can see this gap. As I said earlier, wave three always comes with a gap. That is how to show how impulsive. It's always the wave is always the strongest and the longest in the Elliott wave. So you can see this is one gap here. It's pulled back a bit, then went up again. Then it stopped at this level. It crossed 1.618 and stopped at, let me see which level it stopped at. Let me put let me see 0.618. I think I should put this on. No, it's not this one. So the important thing is it stopped at 1.618. Looking for where, you know, okay, let's see. Okay, so it actually stopped at 2. Okay, stopped at 2. So you can always, usually with 3 usually extends more than 1.618. You can extend as far as it wants to go. Can extend to 3.618, even sometimes extend to 5.618, depending on how good the market is. Okay, so the it stopped here. So this is our 1, 2, and then this is 3. Now this is 4. And a normal rule for wave 4 is that wave 4 doesn't retrace more than 50% of wave 3. What does that mean? I will show you what that means right now. Let me remove this one. So these are Fibonacci retracements. When you plot it from here, from the beginning of wave 3, which is here, and to the ending of wave 3, which is here, we can see that when wave 4 came into this 50% zone, it rejected. As you can see, normally wave 4 doesn't cross below 50%. And there are also rare occasions whereby it comes to this 0.618, but if it rejects here and start consolidating, then that is fine. But ideally, it's not meant to cross here and go down too much. If it goes down too much, it's a very strong correction. And if it has to continue correcting, either it corrects, go down to this 0.5, still come up again, just continue correcting sideways. Okay, as you can see, it stopped here, then it went another brief uptrend and started consolidating to this small point. So this is where wave 4 potential is supposed to end, because of how the market actually, you can see how it's as if it's deflating. Okay, so I'm going to add another thing now. There are different types of corrections. Okay, in a corrective wave, in a 5 impulsive corrective wave, when wave 2 is small, when the correction for wave 2 is small, wave 4 is always big, because that is where people are taking more profits. You can see from this beginning of wave 3 to the end, it's a very strong very let me see how many percent win. I'll be like from 12 naira to almost 14 naira. That is more than 100% ROI, return on investment. So basically, people will take a lot of profits to even this place, and people are now buying into value. Okay, people are buying into value. So yeah, this is let me first draw the waves. I'm going to use Elliott's wave. This is one, two, 3, 4, 5. So I'll show you where 5 will end. But for now, let's just focus on this first markets or these first waves. First of all, I'm supposed to change this cycle to this intermediate cycle is for weekly charts. So I'll change it to minor. Okay, right. I think I'm correct there. I don't know if it doesn't really, well, it doesn't really matter. The important thing is that you're getting the wave count, sure. Let me see if this is minute, hour. Okay. Then I'll leave it. Sorry, intermediate. I'll leave it at intermediate cycle then. All right. So this is 1, 2. This is end of 3, and this is 4. Now, if you're looking for a buying opportunity here, you use what I'm seeing here. The way I'm looking at this market, this our correction in wave 4 looks like a triangular correction. Okay, and a WXY. This is why I call this market textbook Elliott wave, because it follows all the rules that are in the Elliott wave rule book or Elliott wave theory. Okay, so this is this is 1, 2, 3. This is W. This is 1, 2, 3. This is X, and this is 1, 2, 3. This is Y. So this is a triangular correction, and anytime there's a triangular correction, it depends on the triangle. If it's a diagonal triangle that is let's say expanding, no, that is um inflate, or that is how will I explain it now? Like how Bollinger Bands is. If Bollinger Bands is expanding, just know that there's volume in the market. So like diagonal, all those like leading diagonal, any diagonal, you know, using all those theories. There are some that it comes as a triangle. There's some correction. So I'll show you this one now. This one is a triangular correction. I'll bring up triangle pattern. So we start from here, from where the correction started from here. This is where it ended. This is where it attempted to continue, and this is where it ended. Can you see the correction now? So if this breaks out of here, this is going to be a strong bullish market. However, it's going to be wave 5, and wave 5 always comes with divergence. Okay, that's one thing about wave 5. First, wave 5 comes with divergence, and again, it's also filled with um emotional buying. Okay, you see emotional buyers, people buy people that missed out on this first, especially this wave 3, will look forward to buying in this area, this 31 30 naira area. So this is a very good opportunity to even buy this stock. Okay, so that is that for this. This is 1, 2, 3. Okay, this is asymmetric. They call this asymmetric triangle. So now let's predict where wave 5 is supposed to end. Okay, now if we carry our Fibonacci extension, we plot it from the beginning of wave 2 to the ending of wave 3, and then to the ending of wave 4. Ideally, let me zoom this a bit. Sorry. Ideally, wave 5 is supposed to stop at uh 0.618. This is 47 naira 61. So from let's say from this 30 naira area, from this 30 or 31 naira area to this 47.61 naira, I believe is more than, let's say, 30% gain, if not almost 50%, but it's a very good gain. So investing in this area, buying at this price is very, very is profitable, because the market still has potential to go up. So if this market breaks out now, then it's an opportunity to actually buy into value, wait for a very short pullback, buy into value before the market exhausts. Also, before the market actually goes to wave 5, it's going to go on an internal 5 wave. Okay, so you should expect like a 5 week before it goes reaches this level. Also, another potential stoppage for 5 can be this 100% here, which is 58.24 naira. So if market goes like this, one, two, three, four, and then five, based on the um what I call it now, based on the sentiments, fundamental what's fundamental sentiments, believe that this market will actually stop at 52.24. Okay, 52.24 naira, based on the good fundamentals this stock as they have. So I believe the market will stop at 52.24. So these are like two stop or two taking profit zones. This 47.61 on the 0.618 and 100%, which is one. Okay, one of the Fibonacci, 58.24. Okay. So this is actually what I call textbook uh Elliott wave. You know, as we move forward, we are going to actually continue getting attuned to most of the rules in the Elliott waves. So this is like a learning process for all of us together. So we're going to be learning together with this chart, following it judiciously, knowing, following the chart and seeing how it performs with all the Elliott wave theories. Okay, so that is that for this is one, two, three, four, and we expect another strong wave five. Yeah. So that is that for that. Normally, let me see. Maybe I should bring up other indicators to the side. Okay. So Elliott wave actually helps you understand the overall market performance. Know what people are thinking in the bigger picture. Okay, instead of just entering market blindly. As you can see, all this analysis now, you know that the market is correcting and the market will soon bust out to this level, which is going to be a very strong gain, almost 100% of this starting level, which is 30 naira. So, and let's check the weekly charts first. As you can see, the weekly charts is actually on the weekly chart. This will be one wave, which means that let me bring out the Elliott wave. This thing on the weekly chart. If this is one wave, let me see. Okay, if this is one wave on the weekly chart, then God, I made a mistake. If this is one wave on the weekly chart, okay, then wave two should come here, and wave three, and then wave four and five. So if this is one wave, this from here to here, because one wave has not yet completed on this chart, so it still has to go to wave five before it becomes a correction. It's going to this wave one has to correct to either 0.618, 0.50, or 0.328, sorry. So on the weekly chart, this is just the first wave of this, which means the market still has strong potential to go on an uptrend. Okay, let me just remove this. Oh no, this is not on to remove. Okay, so as you can see, the market is just coming up. You can see it just coming up. This is where wave one potentially should stop. Then this is two, it's three, four, and five. So long-term investments, this is a good place to buy actually if you're interested. But if you don't buy and maybe you miss out there, you can just wait till it comes back to maybe I'll just say maybe around this 39 area before it bounces back up again. I'm supposed to use the, let me see, let me just use Fibonacci retracement to measure it. So if I measure from here to here, okay, you can see I even put wave 2 correctly. So if wave 2 actually retraces to this 35 naira, okay, this area here, then this is another good buying opportunity. Okay, that is going to be later in the future, maybe next year, or maybe later this year or the end of the year. Depends on how the market performs. Okay, so let's put everything back now. I will remove this one. Okay, I'll remove this one. Let's go back to the daily chart. Yeah, so the daily chart is good. You can see I've already shown you how this is let's bring up other indicators to know how far we have. First bring up money flow. Mm. Then we have RSI. Then we have MACD. What else? I think that's all. Okay, we have moving average. This is my moving average I like using. So let me remove all these sets. We can use all indicators to confirm if this is truly an investment opportunity. All right, now looking at moving average, you can see that it has not yet crossed our moving average going above. However, given how the market has performed, you know, and also given the potential of the market, we say that this will soon cross this place. You can see the close is the close of the previous candlestick, or the last candlestick that closed very close to the moving average. The moving average is 31.17 or 31.18, as you can see. So if it crosses that, then that is confirmed a bullish signal. And also, before, let me even bring back something now. Let me bring back something. Let me see. No. Yes. Now let's do something here. You can see that this thing, this our triangle asymmetric, our asymmetric triangle actually tallies with this. Let me see. This is where I'm supposed to stop. Yeah. As you can see, this our triangle actually, you know, actually tallies with you can see this our triangle actually tallies with our moving average, just to confirm. And based on my experience as someone that's been doing technical analysis for stock exchange, Nigerian Stock Exchange, anytime I see the moving average aligning with the support or resistance zone, there is always surely a strong or potential market reversal on the horizon. And as you can see, the market is going up, coming down, going up, coming down. Potentially, this will go up because of this is the Elliott wave. I've used the Elliott wave to understand that this market, after this strong correction here, will go up. You know, so yeah, so it's 50%. Then this is here, and this is here. So let's see. What else? Yeah, so we have to wait for this to cross here to confirm that the market is very strong. And when it crosses here, it also crosses the moving average. If it goes down, and then that is not even a problem, because we wait for a support level here. Let's put this thing here. This is where our support level will be at this 26.38 naira, which is not a problem. If it comes here, it will definitely bounce up. It will not go down again, because the market is meant to go on a fifth wave run. However, I already said it, this stock has very good potential. So the upside is upside sentiment is stronger than the downside sentiment. So yeah, using this triangle to also it tallies with the moving average, which actually gives a very strong confirming buy signal or potential uptrend on the horizon. So what else? What else? What else? Mm, Now we are going to bring up. Let's check volume. You can see volume is a bit low, even though it closed. You can see it's very low, but however, is bullish, and the bullish volume of the preceding or the previous candle before the last close was also strong, which means that traders rejected the price at let me see, let me put my cursor there. This is at 30. No, this is where it was at 30 naira, which was the former low. Okay, we rejected the price at 30 naira, and that is why this next candle was bullish. The last candle was very strong, strongly bullish. So if this crosses this, that moving average now, that will confirm a potential uptrend on the horizon. Then we can see that even though mark money flow is actually tilting downwards, okay, it's tilting that was showing that there was profit taking. Okay, there was profit taking, and but even though it crossed below our threshold, which is 50, it still remained at 48.99, which means that the stock still has potential. Why everybody is not looking here? If you put your money maybe on a pullback, so expecting a pullback, to happen before the main uptrend, you'll be at an advantage instead of waiting for it to go on a full beat. You can see that our or RSI is actually tilting upwards, which means the market is actually regaining momentum. As you can see, this is one and this is two of our sorry, this is one, two, and this is three of our RSI. If you check the video I did on RSI, combining RSI with Elliott rate and Fibonacci extension, you will see that uh most of the times wave 3 is usually higher than wave 5, and you can see this strong bearish momentum that's forming lower lows. This is divergence. Even though this goes up and crosses this, doesn't mean that it's overbought markets. Okay, you just keep seeing it to just be here. Either it will just be, maybe it will not cross this three, okay, or this our highest point here, which is what is the price at 95. Not cross 95, it might be around maybe 80 or 70, depends, but might not cross here. Okay, and also we're going to find out to whether actually wave 3 is always higher than wave 5, because we are going to be following this market back to back and also getting knowledge or an understanding how the Elliott wave actually works and understanding different kinds of corrections. So it's a learning process for all of us. It would be nice if we join it. Then MACD, we can look at MACD. You can see MACD went on a very strong bullish trend, sorry, bearish trend. And as you can see at the end, this histogram started diverging, the quality divergence. When the histogram starts going on divergence, it means that potential a potential trend reversal is on the horizon. So you can see even here, you can see at the beginning of the market, when the market pulled back, this was very strong pullback here. Then we started diverging in this place, diverging, divergence. Then it now went on another uptrend, and then it went very up to this place, and it now started diverging again, divergence, before it went on this. So when you see divergence, just know that this is an early morning, that a reversal is on the way. When you are using MACD, then you just went down, and then you went down strongly, and then it started consolidating here, and now we are seeing another potential divergence. So since the market is still in this bearish signal on the money flow, which also indicates market liquidity, is still downwards. If you're investing in a stock, it's better you buy at a pullback, or you buy at a, let's say 30 naira, waiting for the price to pull back before it goes on a very strong bullish run. So me, I have very strong faith in this setup like this, based on all the indications. Okay, so even this, you can see, even though the volume is low, the market still has potentials. Also, when you check their financial reports and the fundamental towards this, and is an agro allied industry, that just came up in the stock exchange. And during this period, food, we can't do without food, so it's a very good defensible stock, in our opinion. So based on all these fundamental sentiments and adding technical, we can actually make a good decision here. So that is it for now. So we're going to be following this market to actually understand how the Elliott wave actually works, and we will learn together. It's going to be learning together. But looking at this market now, and based on knowledge I've gathered on your wave, you believe this market will go on an up trend run. So yeah, I think that is all for now. That's all for now. So I will see you guys later. We'll talk later. Have a wonderful democracy celebration. Hope you're celebrating. Cheers.